friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride. As you heard, my name is Jerry Robinson. I'm an economist, an investor, a trend trading coach. I teach people right here at followthemoney.com how to invest and how to trade, specifically how to trend trade stocks, ETFs, cryptos, currencies, whatever it might be, whatever your asset of choice is to trade. That's what we teach here at Follow the Money. We also teach options as well. There's quite a few of you who like to trade options out there. And today, on today's broadcast, what we're going to be talking about, as you can see from the title, the Bitcoin boom. This is episode number 440. And those who are familiar with Follow the Money Radio, you know that we are no stranger to Bitcoin. In fact, as I had mentioned on a recent podcast episode, I was going through some of the lists and found out that we were one of the very earliest podcasts to talk about Bitcoin way back. It's been over a decade ago now. And so this is not an unusual topic for us to tackle. And we've been talking about Bitcoin increasingly a lot since that time. I'm looking back here at for example, episode 392, the case for Bitcoin. Episode 391, Bitcoin is now legal tender. Episode number 375, the bull case for Bitcoin. Episode 342, Bitcoin versus the petrodollar. Episode 326, the Bitcoin revolution turns 10 years old. Episode 297, why I'm bullish on Bitcoin in 2018. Episode 294, this way back in 2017, should I buy Bitcoin? And we go back even further and further into the list. We see episode 285, Bitcoin, the new Wild West. I mean, so you can go back and find lots and lots and lots of episodes that we've done over the years on the topic of Bitcoin. And in fact, one of the first people we had on talking about Bitcoin was Trace Mayer back in 2013. We actually had him at our the 2018 summit that we held in Rogers, Arkansas, where we talked about Bitcoin as well there. So we have spent a lot of time educating our members and our listeners on the topic of Bitcoin. This is not something new. But one of the things that we've long talked about is that we would eventually see institutional adoption. That is, that Wall Street would begin to warm up to the idea of Bitcoin. And lately, if you go back for the last couple of years, it's been really a lot of bad news. Even on our last podcast episode where we talked about the new bull market in the S&P 500 that we had detected a new uptrend signal, long-term uptrend signal. And we also talked about the SEC versus crypto, and specifically talked about some of the lawsuits that are going on the SEC accusing Binance of misusing customer funds. Also suing Coinbase, calling it an unregistered broker. But, and so this caused, and then of course that came after what happened last year, the FTX collapse, the FTX exchange. That was a big debacle. There was the Terra Luna crisis of 2022. That was a total disaster. So there's been a lot of, negative news around crypto over the last few years. And so what many people would think, if you just took all of that news, you would think, well, surely Wall Street, would want to stay away from this. I mean, the SEC won't approve it. The SEC is making it very difficult. So Wall Street is probably going to stay away from crypto. And many people have falsely believed that crypto is dead. We even did a podcast not too long ago. I'm looking here in the archives for it, and we did episode 425 back in November of 2022. Near the bottom, is crypto dead? We talked about crypto investing in 2023 back in April of 2023. That was episode number 435. 10 reasons to invest in cryptocurrencies, episode 400. I mean, so again, we've been talking about this over and over and over again. There has been ample opportunity for the retail investor to front run the institutional adoption of Bitcoin, right? So you've had the last 10 years practically or more to accumulate a position in this space. And now, this morning, we have a headline from Wall Street Journal, Bitcoin Bonanza on tap if BlackRock ETF is approved. The world's largest asset manager could be a lifeline for crypto and spark a windfall for some traders. Betting that BlackRock's filing for an exchange-traded Bitcoin fund gets approved might be foolhardy given the black box of regulators' thinking, but a nod would have an electric effect on the besieged asset class if it were to happen. So basically what we learned last Thursday was that BlackRock, which again is the world's largest asset manager to the tune of about $8.6 trillion. BlackRock is enormous, the largest financial institution on earth, indicated interest in launching its own spot Bitcoin ETF. That filing went to the SEC and was revealed on Thursday of last week. This sparked a lot of speculation as to what all of this meant. And in fact, some people began to connect the dots and began to say, wow, look at this. You have the SEC who was targeting, Binance and Coinbase and has been making it so cumbersome in the crypto landscape for these outsiders to operate. And now, when everybody thinks that crypto is dead, I mean, there have been people, major long-term holders of Bitcoin who have been buckling because of the SEC and the fear around all of it, just buckling and saying, okay, I guess crypto is dead. Now we have evidence, very clear evidence that the institutions on Wall Street won in, right? Even with all of the chaos. Why would they want it? Well, you got to remember, Wall Street, tends to wait until there's blood in the streets. And do we have blood in the streets? We do, don't we? So here they come. And so now we have BlackRock, the largest, asset manager in the world, planning now on launching its own spot Bitcoin exchange-traded fund. Now, this will deliver pretty darn direct exposure to the price of Bitcoin to traditional investors. That is, you'd be able to buy the iShares Bitcoin ETF and hold it in your 401k or hold it in your IRA or just hold it in a brokerage account and then get exposure to the price appreciation of Bitcoin without actually having to buy Bitcoin. Now, as you well know, I'm no fan of that idea. I'm no fan of, I would much rather see you, our listeners and our members and our students, I would much rather see you holding physical Bitcoin in cold storage, right? To actually have physical custody and self-custody of Bitcoin. But not everybody, is going to understand that. Not everybody's going to realize the importance of that. And that really, for all intents and purposes, that doesn't matter for this because although I want you to do that, not everybody's going to listen. Not everybody's going to do that. But nonetheless, if this ETF is approved by the SEC, then what we're going to have on our hands is we're going to have an incredible new influx of demand for Bitcoin that didn't exist prior, or that existed but was unable to be satisfied because many people were just unwilling to deal with Coinbase or Binance or Bittrex, which all of these are under assault now by the SEC. And institutions have also been kind of standing back watching what's happening. Now, the fact that BlackRock has made the move and the fact that BlackRock is, the large, massive size, massive influence at the SEC, the fact that they have dipped their toe in the water here and have filed for the spot Bitcoin ETF, this indicates that many others are likely to follow suit. And that's exactly what we've seen, right? It's exactly what we've seen. We've heard rumors, by the way, that Fidelity, which is very crypto-friendly and has been crypto-friendly for a long time, one of the most friendly, big asset managers out there on Wall Street towards crypto. And they're the third largest, I want to say. They're around $4.3 trillion in assets under management. So they're very enormous. There's been rumors that they're going to file for their own spot Bitcoin ETF. But we also heard that many others are already filing. So like Wisdom Tree, which is a big ETF issuer, they have filed for a spot Bitcoin ETF. Invesco has re-upped its filing. Bitwise has re-upped its filing, another asset management firm. So we're beginning to see now many institutional firms begin to come in and say, we want our own spot Bitcoin ETF. Now, the problem is that the SEC has been turning these down. If you're familiar with this story, if you're familiar with how the SEC has handled this up until this point, you're probably familiar with the Grayscale lawsuit. Grayscale is another asset manager out there that runs GBTC, which is kind of a pretty poor proxy for getting exposure to Bitcoin on Wall Street currently. There's really, you can go to other countries and you can find spot Bitcoin ETFs, but here in the United States, the SEC has been rejecting these filings for these types of ETFs, and they specifically have blamed it on price manipulation. They've said, well, these ETFs could be subject to price manipulation, and therefore we feel it would be unsound for us to approve them. Well, there's not a lot of good reasoning behind that, as evidenced by the Grayscale versus SEC lawsuit, which is currently which is currently being dealt with at a court of appeals, federal court of appeals right now. And the judge who's overseeing that case has made it very clear that he finds the SEC's arguments about the problems of the spot market and not being able to approve these types of ETFs as being capricious and as being arbitrary, arbitrary decision making. And that's all we've seen from the SEC underneath Gary Gensler, who's the current head, is just this continual arbitrary decision making in all things crypto. And for whatever reason, whether it's the fact that we should have an SEC versus Ripple ruling pretty soon, which is probably going to go in Ripple's favor, or whether the White House is going to do something about this rogue SEC attacking the cryptocurrency industry here in the United States, or whether Congress is going to do something, which they need to get off their duffs and make some rules here because, again, the whole crypto industry, which is very burgeoning and innovative, is having to move offshore because of the very opaque rulemaking that's going on right here. We call it rulemaking. There's not really any rules. It's very, very opaque, and there's not a lot of transparency. So many companies, like even Coinbase, have been saying we're going to leave the country, potentially, because you're not making it clear. We don't know how to stay within the guidelines. You're not making what your demands are clear. Instead, the SEC has just been suing major exchanges. Now, with all this being said, people might point to the SEC and say, well, they're going to shoot this down. Well, BlackRock's ETF, I would have to say that I think that's probably unlikely. The SEC, don't forget, the SEC is not the final arbiter here of the entire U.S. cryptocurrency industry. The SEC is really just a function of whoever is heading it at the time. And right now we have a very anti-crypto, SEC. And that's just how it is. It hasn't always been as hostile as it is now. And that means that it can change. Also, when you look out at the 2024 presidential election and you look at some of the candidates that are running, there's at least 3 or 4 of them that are openly pro-Bitcoin. They're Bitcoin advocates in many cases. And so, you have this kind of shifting sand that we're seeing. And so just to believe that the SEC is going to destroy the crypto industry and never allow it to breathe is the wrong way to look at it. Instead, what really might be happening here is that the SEC is running interference for Wall Street and kind of suppressing and doing harm, quite frankly, to these outsiders like Bitcoin or like Binance and like Coinbase, who were not already in the club, so to speak, like Blackrock, or Fidelity or whatever. And so now BlackRock sees an opening, right? So now that all of the competition has been suppressed by the SEC, now here comes BlackRock saying, hey, we want our own spot Bitcoin ETF. Now, I don't have the data to back this up, but I did read a data point from a fairly reputable source that showed that BlackRock has filed for 576 ETFs over time. And of those 576 applications, only one of them has been rejected. So that shows you that BlackRock has a pretty darn good batting average when it comes to getting an ETF approved from the SEC. So the chances of them having this rejected are fairly slim. And this is especially true because BlackRock has also understood what the SEC has been complaining about when it comes to price manipulation, and they have agreed in their filing to share surveillance of a spot Bitcoin trading platform with the NASDAQ, which is actually going to list the ETF. So if you look at the regulatory filing, BlackRock has tried to cross its T's, dot its I's. And by the way, another beneficiary of this BlackRock ETF is Coinbase, because they will serve as the ETF's custodian. They will earn fees. So as I mentioned, the BlackRock announcement, the BlackRock filing, and their desire to enter this space kind of blows up the narrative, that crypto is dead, because why would the world's largest asset manager, in the middle of all of this craziness, why would they want to file for a spot Bitcoin ETF if Bitcoin is just going to go away, right? It's not going to go away. It's not going to go away at all. And BlackRock knows it. Fidelity knows it. Wisdom Tree knows it. Invesco knows it. So they want in. This is a technology that is burgeoning, that is innovative, and that is not going away. Wall Street knows it. They want in. Now, you might be thinking to yourself what this means to you. What does this mean? Ultimately, to you as an investor out there, what does this actually mean? We're going to talk about that on the other side of this break. I want to talk about what institutional adoption means and also explain why there's just really not enough Bitcoin for everyone underneath the circumstances that we're discussing here. It's pretty wild. We'll talk about it on the other side of this break. Hold tight. Hey friends, it's Jerry Robinson here from Follow the Money Radio. We just launched a very exciting live weekly webcast called Trends and Profits that I want you to be a part of. It is part of our membership. You have to be a member here at followthemoney.com to be able to enjoy this webcast. But what we do in this webcast is we provide you every week with valuable insights, trend alerts, actionable investing and trading ideas. And then you also have the opportunity to get your questions answered during our member Q&A segment. Each episode of the Trends and Profits webcast, which is every single week, is thoughtfully crafted to deliver 4 segments that will empower you to make smarter investment decisions. We begin with a news brief, helping you stay up to date with the latest market news that could impact your investment strategies. We analyze the current events and economic data and geopolitical trends to help you navigate this ever-changing market landscape. In segment 2, we move into trend alerts and help you stay ahead of the curve with our trend alerts. We share our expert analysis of market trends. We identify key opportunities and potential pitfalls, and we help you discover those emerging trends so you can unlock potential profits. And then in segment 3 of our new weekly webcast, we tackle actionable investing and trading ideas. So when you're ready to take action, this is the perfect segment for you. We present actionable ideas and strategies designed to help you capitalize on market trends, from stock picks to ETF trading strategies, crypto ideas. You'll receive practical guidance to help you achieve your financial goals. And then in our 4th segment, we spend time answering your questions, which matter to us greatly. We believe in the power of community and fostering a supportive learning environment. So during our member Q&A segment of our weekly live webcast, we address your specific queries. We provide insights and offer some general advice to help you overcome any hurdles you may face in your investing or trading journey. So our brand new Trends and Profits webcast for members only, I encourage you to check it out. You've got to be a member here. Of course, you got to go to followthemoney.com/join. Become a member today. Start your 7-day free trial. Check it out. If you want to be a better investor, a better trader, you want good ideas delivered to you in your inbox every single day, Follow the Money. That's where you want to go. Followthemoney.com/join. We're here for you. We want to help you in 2023. I'll see you on the other side. All right, friends, welcome back to the show. You're listening to Follow the Money Radio. You can find us online at followthemoney.com. Now, let's talk about why this information, this news about Blackrock entering the fray, big Wall Street move here, institutional adoption, why of Bitcoin, why this matters. What does it mean to you? Well, let's start by explaining that institutional adoption was always the goal. You know, back in 2012, 2013, when we were talking about Bitcoin at the very beginning, the hope was that we were going to see this technology spread and that it would eventually catch Wall Street's attention. And then you would have not just retail investors buying Bitcoin to protect their monetary sovereignty, but you would also attract Wall Street. And then you would have this huge influx of institutional investors who also, wanted access to this innovative and novel asset class. So we've been, seeing this play out now for a decade. We've certainly seen the war on crypto that we had predicted a long time ago. We expected to see the U.S. launch a war against crypto because it's very, very concerned about protecting its reserve currency, the U.S. dollar. And let's not forget, cryptocurrencies are currencies in some respects. And so because they can be traded and because they're used as currencies, they represent a mortal threat to the U.S. dollar when it comes to demand. The United States doesn't want people transacting in other competing currencies. They want everybody using the dollar, and then they dilute that dollar. They print lots of those dollars, and they have power over them. So Bitcoin, when it was introduced, over a decade ago, it was novel, it was unique, but what was very interesting about it was the fact that there was a finite supply. Okay, this is a shocker. It's a shocker to have the idea of finite supply in our present world where nothing is finite. I mean, there are things that are finite. I mean, obviously commodities are finite. We only have so much oil, but we only have so much natural gas. We only have so much gold. We only have so much, timber or whatever. I mean, you can make the case, that there are some things that are finite. But in truth, we oftentimes don't know the exact amount of how much something is left, because sometimes you'll find new discoveries. So sometimes, you'll hear about oil, kind of supplies being crimped, and then they have this new discovery, right? And so how much oil is actually in the ground and how much can we get? Well, we really don't know. I mean, we got a pretty darn good guess, but we don't really know because you can always find something new. That's not the way Bitcoin operates. This is novel to our fiat currency kind of system, and especially to our fractional reserve banking system. This idea where you just print money out of thin air and create new supplies. There is no such case in the case of Bitcoin. Bitcoin is a mathematical protocol that limits the total number of Bitcoin to 21 million. 21 million. Now that may sound like a large number to you. You may think, well, that's a lot of Bitcoin. But when you really think about it, it's really not at all. In fact, it's very, very small relative to many of the other assets that are out there. I mean, just think of it in terms of stocks. Like if you take a look at the largest stock by market cap, in the world, it's Apple. Apple currently with a nearly $3 trillion market cap. But when you look at how many shares are available, there are 15.8 billion shares outstanding right now with a B, 15.8 billion, okay? Or Tesla, which has 3.1 billion shares outstanding, or Visa with nearly 2 billion shares outstanding. And so when you think about it, and then you think about, Bitcoin has 21 million, and unlike Apple or Tesla or Visa, Bitcoin can't create, new shares and expand its shares outstanding. It can't have like a secondary issuance and then issue more Bitcoin, right? That's not really how it works. 21 million Bitcoin is all that exists. Now, when you think about that, 21 million, that's not even enough Bitcoin for every millionaire in the United States, let alone in the world. I mean, according to the best estimates we can find, there's just under 30 million millionaires here in the United States. About, roughly 1 or 2% of the population would be considered a millionaire, have more than $1 million in assets. And whenever you look at when you look at the number of millionaires here in the United States, about 30 million or just under 30 million. So if all of them wanted to buy one Bitcoin, they can't. There's only 21 million total. And as of right now, I think the total amount is somewhere around 19.4, 19.5 million Bitcoin, in existence. There's going to be a total of 21 million, but you won't even have that total of 21 million until more than 100 years from now. The year 2140 AD is when the last Bitcoin is expected to be mined. So we're talking about a very, very small supply from a from a group of people who could theoretically afford Bitcoin, to buy one whole one. You got just under 30 million millionaires in the United States, and there's not one for everybody. If you look around the world, there's more than 56 million millionaires around the world. There's not enough Bitcoin for all of them to buy one. Okay, and so that's pretty interesting. Then you think about not just the fact that there's only 21 million Bitcoin. Then you think about the fact that many of the Bitcoin have been lost, right? Bitcoin has been around for, well over a decade, but many people have lost their Bitcoins during that time, either through sending them to wrong addresses or just, losing their private keys or whatever. And we don't know how many of those are gone forever, how many of them can actually be recovered. But the best estimates that I've seen shows that at least 10% of the supply may never be found. Some other reports that are reputable suggest that number is as high as 25% of the outstanding circulating supply, is lost forever. So we could say that number is somewhere between, say, 2 million and 4 million, maybe even 5 million Bitcoin that are just lost forever. So when you subtract that from the 21 million, then you're only left with like 16 or 17 million. And then when you look, for example, at the investors in Bitcoin, many of them have bought Bitcoin, with a similar view of that they might hold towards gold. They hold it as insurance kind of thing. So one of the things we've taught here for the last decade is that you buy your Bitcoin and you hodl, right? You hold. You just don't sell. Obviously you might take some gains on big rallies, but I mean, the overall idea is to have this as a part of your portfolio, part of a diversified portfolio that you just have. Just like you're going to own some stocks, you're going to own some real estate, well, you're going to own some Bitcoin, you're going to own some digital assets. And when you look at the amount of Bitcoin that is dormant, that is, that it hasn't moved, that it's just, stuck on somebody's wallet and it is not moving, over 53% of Bitcoins ever minted haven't moved for the last 2 years. That's according to an April 2023 report put out by Glassnode, big data aggregator and collector in the crypto space. More than 1 out of every 2 Bitcoin in circulation has not moved in the last 2 years. That's pretty interesting. If you go further, you'll see that nearly a third of all Bitcoin in circulation haven't moved in the last 5 years. And then if you go at the last decade, according to Glassnode, just under 15% of all Bitcoin in circulation has not moved during that entire decade. Okay, so a lot of people buy Bitcoin and then they don't sell it, right? So you have that kind of mentality or that kind of idea. So what does this mean when you really boil it down? Well, you've got 2 to 4 million that are lost. So that brings our number down to, the number that we actually have. 21 million leaves, like 16, 17 million that you're actually left with. And then you've got a large portion of that many people are just not going to sell. right? They're just going to hold on to. And now you have BlackRock wanting to launch an iShares, a Bitcoin ETF, and they're going to back this ETF with Bitcoin. Where are they going to get the Bitcoin? Well, they're going to have to buy the Bitcoin and then hold it in custody to back their ETF. And as is Bitwise, as is Wisdom Tree, as is Invesco, and anyone else who is eventually approved for a spot Bitcoin ETF, they're going to have to be able to back it. And of course, a backed Bitcoin ETF is going to be the gold standard that people are going to demand. They don't want something that's just trading on a promise. They want to know that it's actually backed up. So that means they're going to have to go, these big Wall Street firms are going to have to go into the supply, and they're going to have to buy Bitcoin and take it off of the market. Okay, so it's just a matter of thinking this through. If you only have 21 million total, right, and you're not even going to have that total 21 million until 100 years from now, more, 2140 before you finally get that 21 millionth coin mined, then what does this mean for the total supply and the demand? What's the demand supply picture going to look like? We suggest to you that we're going to see Bitcoin soar. Now, I'm not saying it's going to soar tomorrow. I'm not saying that it's going to soar this week. In fact, we could see that what we're going through right now with the BlackRock bonanza is, just going to be a temporal thing before, it sells off and then comes back. I'm not making a prediction about where the price is going to go tomorrow or next week. But we do have a price target on Bitcoin of 275,000 in 2025. Now that's a 10x or 9x from where we are today. That's pretty ambitious. But we've held that price target since 2020. That's been our price target for 2025 since 2020. By the way, Bitcoin was near $3,000 whenever we were making that forecast. I mean, it had fallen sharply back in 2020. So the point is that we see Bitcoin going higher, but there's others who have much more ambitious price targets. Kathy Wood, for example, over at ARK Invest, says that she could see Bitcoin, and they're forecasting a $1 million price target on Bitcoin, I believe by 2030. I could be wrong on the date on that. I'm doing that from memory, but regardless, that's a pretty massive price target. But is it really out of the realm of reality whenever you think about the total supply versus the demand that could be coming here, right? There's a lot of people who want to own Bitcoin. They don't know really how to do it. But if they had an iShares Bitcoin ETF, they'd probably have some exposure to it. I've seen some of the big, financial advisors out there telling people that they need to allocate some part of their total portfolios to cryptocurrency and digital assets. I saw Rick Edelman, for example, one of the really popular financial gurus here in the United States, saying that everybody needs to have Bitcoin and Ethereum in their portfolio if they want to have a diversified portfolio, right? This is incredible. And when you think about where we were a decade ago, where everybody, they thought it was rat poison, they thought it was for illicit purposes. Now you have respected people saying you need to have exposure to this. I think it was Susie Orman also who was saying you need to have exposure to Bitcoin. We've heard companies that are now beginning to realize, well, for our corporate treasury, maybe we'll put a little bit of, of our excess cash into Bitcoin, right? So you think about 21 million, that's all you have, and you have all of these people who want to buy one or two or five or 10, right? And they have the means to do it. It's incredible what this means potentially for the future of Bitcoin's price. So obviously it's not all about the price, because Bitcoin not only is an asset that has incredible price appreciation going forward, it already has, but it has more price appreciation ahead. But let's not forget the innovative nature and innovative structure of Bitcoin itself and what has actually occurred here with this invention. So we really have an incredible, I think, opportunity lying right before us here, and it's not too late. This is what I want to stress to you. Even though we've been saying on this podcast for 10 years, Bitcoin makes total sense. We would like to see you have a little bit of exposure. When we first started, I would tell people to say buy one Bitcoin just so you know how it works. Many of our members were buying 5 or 10 back when it was $25 or $250. I mean, this was, way back when. And some people might say, well, I can't do that now. So, I need to find the next Bitcoin. I think what people are going to find out is the next Bitcoin is Bitcoin. If you're dealing with some of these smaller tokens and some of these other projects, and you're over leveraged in those, I would tell you to be very, very cautious. Wall Street is picking the winners, and let me tell you what they're going to do. This is a little side note, little bonus here. When they finish getting all their spot Bitcoin ETFs, whenever they've fully entered that space, guess what's next? Ethereum. Ethereum is going to be next. They're going to do something very similar to Ethereum, and Ethereum is a deflationary project. So that means that the total number of circulation in Ethereum, the total amount of ether out there is diminishing. It's going down. Okay, so again, it's a similar situation where you have a supply that is tight and actually tightening, and you have rising demand. So if you go out 5-10 years from now, I think people won't be able to comprehend what has happened to these prices, and it will not be strictly because of their popularity. It will not strictly be because they were early entrants. It will not strictly be because everybody, including your aunt and uncle and your grandpa, owns it through their 401k or whatever, but because of the sheer total number, right? It's always been about one thing. The finite supply. I feel like a broken record talking about this. We've been talking about it so long. It's the finite supply. There's nothing like it. Like I said, companies can, publicly traded stocks can issue more shares, right? Overnight, they can double the amount of shares and dilute the amount that you have. Dilute your shares. You see the same thing in other aspects. There's other types of situations where dilution can occur. You just don't have that same type of dilution occurring here, right? So Bitcoin and Ethereum, these two have gotten a pass from the SEC. The SEC has not indicated whatsoever that they think these are securities because they passed the Howey test, and the Hinham documents seem to suggest this if you've been following the SEC Ripple case. So Bitcoin and Ethereum have been kind of green-lighted by the SEC. It's the other smaller projects that are going to be, facing a stricter test and may not receive the same kind of treatment, preferential treatment from Wall Street and from the SEC. So just be aware, be aware of that. And I'll just conclude today's show by reminding you that the way we approach Bitcoin, the way we approach cryptocurrency is the same as it's been for 10 years. What we do, and we'll say it again, is we dollar cost average every week into Bitcoin, right, and Ethereum, and then a couple of other smaller projects which we share with our members. And then on top of that, in addition to dollar cost averaging, how much do we dollar cost average? We dollar cost average a nickel out of our total investable assets, total investable money. So every month, we may say, okay, we have this much to invest, right? Because investing is a habit. It's not something you do once. It's something you do regularly. So every month we invest. We invest in the stocks. We put away money for a real estate fund. We want to buy more real estate. So we invest. So of the total amount of money that we could invest, we take 5% of the total amount of money we can invest that month, and we put it into Bitcoin and Ethereum, and then a couple of other smaller projects in the crypto space. A nickel, 5% of our total amount. Now, some people might say, well, I want to put 50%. Well, be careful. This is a burgeoning new asset space, and many people have been burned. But the point is that I think that, a nickel, a 5% allocation to this space is not overwhelming. It's not crazy. It's not ludicrous. It's not irresponsible or reckless. I think that a 5% allocation is completely normal. And especially now that we see Wall Street adopting it. Now we see institutional adoption. Now, whether the SEC approves the Blackrock ETF remains to be seen. But I think that chances are high. And I also think that when they actually approve it, it's going to set off what could be a very large rally. And the example we would give is look back to the very first spot gold ETF that occurred, I want to say it was nearly 20 years ago. And that led, of course, to a big, big rush because, again, many people don't know how to buy physical gold. You can buy physical gold right through Tom Cloud, our sponsor, which we make it very simple. But the point is that a lot of people don't know how to do it. And so they'll just buy gold or get exposure to the price of gold through an ETF. It makes it simple, right? And that's how most people are going to buy Bitcoin. Right? Most people aren't going to go through the process of buying Bitcoin, putting on a hardware wallet and all this. I mean, maybe in the future they will, but at least right now they're not going to. They want to buy it through an ETF, right? They want it simple. And then the ETF has the custody problem and all of this, and they don't have to worry about it. Okay, so that is going to be huge in our opinion. And so we are in the final windows. I think Michael Saylor put it best recently whenever he said the window to front run institutional demand for Bitcoin is closing. It really is. The window to front run institutional demand for Bitcoin is closing. We've had a decade now to accumulate Bitcoin at relatively low prices before the massive institutional investment firms have, stepped in now to jump into the asset class in a meaningful way. So it's not too late. It's not too late for you to develop a responsible investing strategy around Bitcoin and Ethereum. It's not too late. And I would encourage you not to buy them and leave them on exchanges, but instead I would encourage you to buy them and put them into cold storage. And if you don't know what that means, we want to help you. That's what we're here for. That's what we do. We have helped so many people over the years actually, learn how to buy Bitcoin, why they should buy Bitcoin, how to store their Bitcoin, and then we keep them updated through charts and commentary. I mean, that's what we do. We do it for Bitcoin, we do it for Ethereum, we do it for gold and silver, we do it for the S&P 500 and the NASDAQ 100 and many stocks. That's what we're here for. So followthemoney.com. Go check us out. Also, if you've never watched our Bitcoin 101 video course, we have that in our store. It's an absolute value because it tells you, this is stuff that, the things we said in that course, they're unfolding before our eyes right now. And so it's a very valuable course. You can find that on our website, followthemoney.com/Bitcoin 101. Followthemoney.com/Bitcoin 101. You can buy that video course, watch it online. Very, very powerful course that'll help you understand why Bitcoin is doing well, why we think it's going to continue to do well, and how you can participate in the coming bull market rally. All right, friends, that brings us to the end of today's broadcast. And as we come to the end of today's episode, let's reflect on the timeless wisdom shared by the legendary investor Benjamin Graham, who said this: "The intelligent investor is a realist who sells to optimists and buys from pessimists." These words remind us of the importance of maintaining a balanced perspective in the face of market exuberance or despair. The rise of institutional investors in the Bitcoin market, as we've been talking about on today's broadcast, really does signify a new era where established financial titans, these big, massive Wall Street giants, are recognizing the transformative potential of digital assets. And as the Bitcoin landscape continues to evolve, we as investors need to remain grounded and adaptable. Institutional involvement brings both challenges and rewards, and it's our responsibility as investors to stay informed, make educated decisions, and navigate this dynamic landscape with wisdom and prudence. Remember, the journey of investing is a continuous learning process where realists, as Benjamin Graham just put it, thrive by analyzing market realities and making thoughtful choices. By embracing this mindset, we position ourselves to seize upon opportunities, weather uncertainties, and build a prosperous financial future. As always, I encourage you to stay curious, stay informed, and remember, when you want the truth about the global economy, to just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always